नहीं देख सकते chats. Hello and welcome to Moneycontrol. We are at the last leg of the most awaited event of this year, the elections result. The market seems to be rejoicing what has happened over the weekend. Exit poll numbers were out, and market pundits who were worried about the Lok Sabha seats of BJP and NDA are now more optimistic post the exit poll numbers. Additionally, over the weekend, we saw the GDP numbers released came in at 8.2% for the financial year and 7.8% for quarter 4, much above market expectations. Amid all the optimism and favorable sentiments, Nifty, as you can see, has had a euphoric rise today, trading at around 23,200, up 700 points, while Bank Nifty is trading at around 50,500, up around 1,600 points. To take this discussion forward, we have two FNO derivatives traders, Santosh Pasi and Kirubakaran Rajendran, joining us to take us through their understanding of current markets, historically what trends in derivative segments are seen during elections, and the answer to the pinning question of how to position trades for success for tomorrow's result day. Gentlemen, thank you so much for joining me. I'm going to straight dive and ask you all, what's your understanding of the current markets? Nifty is at 23,200. Do you see more upside in the coming days? Is 24,000 Nifty something that you expect? Santosh, if we could start with you. Santosh, can you hear me?
Yes, thank you so much, Suchitra, and thank you so much, Moneycontrol. In fact, Suchita, a few months back, we had a interview with you. Okay, that was an interview that was published in the Moneycontrol. I said that in the year 2024, I'm expecting market to go to 24,000. So that is what I'm positive. So in the coming months, I'm expecting market to just go and touch 24,000K. For this particular week, I'm expecting another maybe a 2 or 3% rise in the Nifty. That is what my view. So as we have discussed yesterday also, that we have created some strategy where we kept a cushion of around 6% on the upper side compared to the Friday's closing. So today it just moved around 3%. So I'm expecting another maybe 2 to 3% could be a possible rise, and then yes, it can go a 24K in the coming months.
Kirubakaran, what's your view?
Yes, Suchita. So I also have a similar view with respect to what Santosh has said. See, with respect to the markets going up, we are in complete bull market. So definitely most of the stocks, even though it is overvalued, the momentum factor will keep coming in. So there will always be a factor where whatever the stocks, be it mid cap, large cap, or small cap, these stocks can continue to rise in the short term. But with respect to event wise, if someone is trading specific to events, then obviously we need to play based on how the overall option data suggests. So for that we have to analyze what the past historical data suggests with respect to 2004 elections, 2009 election results, and 2014 and 2019. So if we observe the last 4 or 5 election results, one thing that is highly certain is before an event, all the option prices will be trading at a significantly higher price. But post-event, definitely the price will decay. So if you're an option buyer, you might be tempted seeing, trying to get into these options, like trying to buy an options, expecting the market to go up significantly the next day. But the problem is because of already the higher IVs and already the premiums are already trading at a much higher price. If you're an option buyer, even though market goes in your favor, you might not be able to make a significant profit out of it. Even in fact, there is a probability that you could lose money if you're an option buyer before an event. So it is better to play a risk-defined option selling strategy if you're trying to deal with this election result.
So if on election day, the results are in line with exit polls, then do you see more upside? You have mentioned 2 to 3% upside in tomorrow. So how much, what if today we have to place a strategy or a trade, what would be the way to go forward? Should you place it today or should you wait for the result tomorrow and then immediately kind of place that?
So usually what happens is during the once the exit poll is out, market tends to rally. That is what we have witnessed in the past couple of years also. So that is what we have seen today, where market has already rallied 3%, and we have seen significant movement in across all indices, all stocks. So portion of the movement has already factored in today. And tomorrow, even though there is whatever the results as per the exit polls, even if we met as per the exit polls, definitely market can move up, but from there whether it will continue to move up or not is definitely a doubtful factor. So tomorrow the expectation could be, even there is a gap up, we might not see the gap ups going to sustain. It might come back, just like 2019 result, we had a gap up, market moved up, and in the second afternoon market started going down, and end of the day it started closing flat. As Santosh has already said, even though from Friday closing we were expecting 5 to 6% of move, out of that half of the move was already done today. So the remaining half of the move might come in the first half of tomorrow, and post that we might close flat. That is what my expectation is. So if you're an option trader who's trying to deploy or make profit out of it, try to make profit out of the IV crush, which is the VIX. VIX has already crashed 20% today. So I'm expecting another 15% or 20% crash tomorrow or the coming weeks. So as an option seller, one can take an iron counter kind of a strategy where they can short 500 points away or 1000 points away OTM options and try to buy an hedge, which is 100 points away with respect to Nifty. By this way, their risk is totally defined. And even if Nifty moves 2% to 2.5% of movement tomorrow, still there is a possibility of making profit with this trade.
Santosh, you have mentioned about the 2 to 3% upside move. Is your view similar to Kirubakaran, which is that after a gap up plus a strong up move, there will be profit booking in the second half, and one should position the trade? What should be your positioning of the trades if one is to take it today?
Yeah, absolutely. I'm on the same page with the Kiro. Okay, that's my thought process. In fact, we have yesterday we discussed that. Okay, so today data moved against us almost like 3% up. And if you would have taken that yesterday's trade as a paper trade or whatever, even that trade is currently in positive. Although data went against 3%, but because of the IV crash that happened today around 17%. Okay, so that was good enough, and we are still in that trade as a positive trade. So in case if you want to
This
take
trade
any trade, yeah.
this trade is the one that we published on Moneycontrol's website.
Yeah, absolutely. And in case if you want to take a trade today, I would recommend to go ahead and take a trade. Okay, because what happens in case market drastically moves up and down, still IV gonna help us. Okay, so IV crush would gonna help us. At the same time, tomorrow there would be we are very close to the expiry date. I mean, something a 0 DT, something 1 DT, 2 DTs are there. So that would help us in terms of Vega as well as Theta. So on the upper side, I do expect that Nifty can go all the way to maybe 23,500 to 600. That's maybe. And on the lower side, like whatever is yesterday's low, I don't think it will go down. I mean, today's low would be the low, and then another 300 or 400 points on the upper side. And in case some really good news comes from the election, maybe another 2 or 3%. That is what Max expected. Yeah.
So do you see a sharp correction? Kirubakaran, you've done some analysis of Nifty and VIX movement pre and post election. Can you broadly touch upon those points of how they have moved? And do we see a sharp correction or a sharp profit booking? And to what extent would that be if someone has to take a bet for the whole month for the June monthly expiry?
Yeah, so with respect to historical analysis, what I have seen is starting from 2004, if you see the market was in complete downtrend. So from 1868 for now, I have segregated 1 month, 1 week, and 1 day before election, and from there, like how the market behaved after the election, after 1 month of the election, how the market behaved. So 2004 was a complete downtrend. That was from the UPA government when UPA government won. This was the overall result looked like. And 2009, if you see, the same happens where the same UPA government came in, where just before the election, the rally happened. So there was a very good rally on the upside until the election result was there. And once the election result was over, then there was no movement at all. It was totally flat because there was major movement already happened before the election results was out. So from that election results time onwards, the next 1 month, there was no bigger movement. And if you see the 2014 result, and same thing happened prior to that, market was in around 66.75. And from there, it rallied almost 18% upward. It was totally uptrend because there was a change in government and people were expecting no total, no new economic reform. Multiple expectation was there, due to which market rallied completely. And 2019, if you see, the market did not move much at all. It initially went down and then it started moving towards election. And if you see, the overall result was zigzag. And because the expectation from the market was met, so people expected that the same government no wanted to come again, and they expected the same government to form again. That is what happened. And post the election, if you see, there was no major movement that has happened. And with respect to 2024 election, what we are expecting and what the market expecting is almost similar. Like as you could see from the exit polls, we have already witnessed a good up move. So even if this up move continues from last 1 month till election result, there was no major up movement or no major down movement. Market was staying flat. So market was waiting for some trigger to make that up move, and that trigger will be the election result. So probably what I am expecting is once the election results are over, we might continue to see the uptrend, because for the last couple of months, market is trying to break the all-time high and trying to surpass higher, but it was breaking up and then coming down, breaking up and then coming down, and we have been in a very good consolidation phase. So I'm expecting the market to go into further uptrend territory in the coming months once the election results are over. In case even if there is any correction that happens, that is a very good opportunity for long-term investors to accumulate good stocks.
So what would be your target for Nifty?
So I'm definitely expecting more than 25,000 by this end of this year.
Okay. And for the month of June, as a bet to be taken, you prefer like option selling? What kind of strikes should one take
Yeah,
if
I
one
would
to
prefer options. I would
example?
prefer option selling. Yeah, with respect to specifically election result on play, what I would be doing is I'll be trying to shorten OTM options with respect to indices across the indices, Fin Nifty, Nifty, and Bank Nifty, where I'll try to short 500 points away OTM options and try to hedge it just 100 points away from my short entry. This way, one thing that I'm certain is I might not be sure whether the market is going to go up big time or go down big time, but there is one thing that is really certainty is there is whenever there is such kind of big events that happens, definitely there is a high probability that VIX is going to come down, IV is going to crash. So that will result in premium decay. So when I'm trying to deploy this kind of risk defined strategies, my risk is defined, my returns is also defined. So I'm expecting to make 3 to 4% of overall returns with respect to the capital that I'm going to deploy. So this way, any conservative trader who wants to take a risk-adjusted returns, wanted to take on options, selling on the weekly options, this is what I would suggest. A short iron counter is what I would recommend.
Okay, you've touched upon IVs and implied volatility, which is the topic for discussion now that we're at the peak of volatility. VIX was at the peak 26. It touched. It's down 20% today. Santosh, if you could explain what exactly for our viewers, what exactly does an impact of an IV fall have on the options?
So
And what
IV,
have you seen historically? Kind of, if you could touch upon that.
yeah. So what happens if you're trading the cash market or the future market? Then if the thing that leads is only the price, okay, so that's the underlying price. If underlying price goes up, that is the things. But what happens in case of the option? The price, the underlying price may be the same, but because of the sentiment, because of the panicness, uncertainty, the premiums rises. Okay, and that is what we call it IV or volatility. Okay. So currently, because of the uncertainty, and that we have seen during the earlier elections, as you did mention that IV does rise, and maybe tomorrow, maybe at around 8 or 10 o'clock, you might see that it would be at the peak, and then suddenly it's going to drop. Okay, and that is what my bet. So a lot of guys do trade using the data, that is direction. A lot of guys they try to make the money from the time, and in my case, like my focus is mostly on the volatility. So my primary indicator is what volatility followed by the theta, and then we go for the direction. I don't majorly bet on the direction, but I should be like more focused on the volatility. So in a current scenario, as we have seen from the mid of the last month and as of now, I mean today also the IVs are increasing, and although today it crashed by almost 17 to 18% as of now, but tomorrow again as the counting starts, there would be a lot of blood pressure would change from here to there. and then that panicness would create a further maybe some certain rise in the rise in during the intraday, and then it will crush like anything. Okay. So as Kiru did mention that, and you have written the article yesterday at the Money Control. So we are on the credit side. We are extremely saying that go for the selling strategy. Maybe sell at the money, that is also okay. Sell out of the money with the insurance, that's also perfectly okay. But look for some kind of a selling strategy because of the volatility, because we are paying the high premium. So IV high means higher premiums. If the premiums are very, very high, it's better to go for the selling strategies. Versus if premiums are very, very low, then it's better to go for a buying strategy. So currently, if you ask me, Santosh, even in the sleep, I would go for some kind of a selling strategy rather than a buying strategy.
Can you give an example of a strategy that you have that for our viewers, what you can take for tomorrow and for this week and for like a monthly basis, if one has to go like an intraday based strategy or weekly strategy or a monthly strategy, what would be your recommendation?
Yeah, so for the weekly strategy, as it was published in the Money Control yesterday. Okay, so those and so what even Kiru just mentioned, that short iron condo, those kind of things, those are the best strategy to go in the current scenario. Absolutely, I'm with the on the same page with the Kiru. And in fact, we have published all the four different combinations. If BJP comes with very strong numbers, if BJT comes with slightly okay numbers, then it goes kind of this, and all the four different scenarios are there. And if you notice, all my four strategies are either iron condo or combo of the iron condo, even a variation of the condos are there. That is for the weekly trades. And just to give a variation for today, in case if you guys are not comfortable with weekly expiries, then today I'm gonna go for something like a monthly strategy. In fact, that is we call it a diagonal spread. Okay, so that would be June month as well as July month. So what happens here? We're gonna take a benefit of both IV for the July as well as June. So June the IVs are very, very high. So we're gonna sell something in the June series, and we're gonna buy something in the July series. So maybe you can show it on the screen, that that's a strategy. I mean, okay, yeah. Can you show on the screen? Oh,
Um, we
yeah.
will we'll publish it out. Um,
Okay. Okay. So the
with
strategy is that yeah, the strategy is that go
But
and
you
sell
can
something
mention
out.
the legs. You can mention
Yeah.
the legs you are looking at. What strike
Yeah.
price?
Yeah, so currently, if you want to go ahead and take a trade, the bet would be that go and sell something out of the money call and put. Okay, so here my recommendation is that on the lower side, just go and sell a put of 22,500 for the July for the June 27th. Okay, that is a monthly series I'm saying. So the current is trading at around 180 around. So that you're gonna sell 22 of 500. 500, just remember that's a psychological number also. Okay. So just go ahead and sell, and but here the quantity would be two lots. Okay, so this would be two lots of a put. We are selling for 22,500, and on the upper side from the current price, okay, we are going for around of 300 or 400 points up, or maybe around 500 points up. So that would be 23,800 or 700. So you might go for 23,800 and sell a two quantity of a call. Okay, so what we are doing here, we're selling out of the money put, out of the money call. So 22,500 put and 23,800 a call. Both are the two quantities. Okay, and we have to buy something. Okay, so here we are going to buy for the next series. So that what I'm saying is July series. So go ahead and add a long put of 22,300. That is further out of the money. And but in this case, the quantity would be only one lot. Okay, and same thing for the call side. You just go ahead with the July series, and that will be 24,000 call. And that would be currently trading at around 360 odd numbers. Okay, so just remember here we are selling two out of the money calls and put, and then 200 points gap further, and we are buying out of the money calls and put, but that would be for the next series. Okay, so if you consider this, the maximum reward as of now, if you go for Pearl strategy, in that case, that would be around 18,000 or 18,900 numbers are there. And the total margin requirement would be around 1 lakh 20,000. So if you consider that, your reward will be maybe around if I'm correct, 18 out of that, that would be around 78% reward would be there. Okay, 18 out of 120. Okay, so whatever number comes, around 78% reward is there. The best part is that the protection, the break evens. Okay, so on the upper side, we are protected all the way to 24,300, roughly 24,300. Okay, so if Nifty doesn't go all the way to 24, 300 by end of the June series, you are in the green position. On the lower side, all the way to 22 around 70. Okay, 22,070. So if you see in the terms of percentage, we have a room of 5% on the lower side, and we have around a 4.5% room on the upper side. Okay, and I think this is a much a comfortable strategy for me personally. If I want to go, I can go ahead with this strategy. And in fact, last general election until now, we have used this kind of strategy on multiple events. In fact, last general election, we made a similar strategy for two different combinations for Bank Nifty as well as for Nifty. One was weekly over the weekly, one was monthly over the monthly. And in the last general election, all the four were in the green. Okay. Plus, during the budgets also, we have used similar strategies. And this time also, I'm betting that this strategy would turn into a green. Okay. So just remember here, room is around 4.5% on the upper side and on the lower side 5%. So that is around, if you consider 9.5% cushion is there, and that would be a reasonable cushion considering that today's move also.
Interesting. Kirubakaran, I have a question for you. In case the result is not in line with exit polls, then what would be the counteract in that scenario?
See, market will get into a panic mode. See, what happens is compared to exit polls, there will always be a 10 to 15% deviation with respect to the actual live result that is going to come tomorrow. So we have to be prepared with respect to these kind of volatility that is going to happen tomorrow. So what happens is, as the days progress, you could see the overall result that could fluctuate with respect to the exit polls. So until noon or till 12 or 1 o'clock, we might not be so clear about the actual trend, what is happening, and what is the overall expectation is going to be. So if the result is 10 to 15% deviation is there with respect to exit polls, then we no need to worry much. We could see a fluctuation, and end of the day, market is going to continue the same trend. But if it is totally opposite to what we have been expecting, say suppose instead of NDA, the other government is coming into the play, then that is totally against what the overall market was expecting and overall what the people were expecting. In that case, you can expect even a lower circuit. That is also possible. So when the no expectation is totally going against the markets, then we can definitely expect the market to go down. If not, it should be continuing the same trend.
Let us now move on to like understanding stock specific option strategies. One, it becomes difficult to sell options on the stock side. So should one really go for option buying in stock specific? And if so, we've already seen stocks sectors like PSU, infra, railways seen quite a bit of a run up. So where to place your bets is the question. Both of y'all can weigh in on this. We'll start with Kirubakaran and then we can go to Sir Santosh.
Yeah, I would go for Adani group of stocks, expecting the same government to continue. And if that happens, then we can know, because the government and whatever the formation of new government that's going to come, they are going to focus specifically on the overall infrastructure of the markets, and all these economic reforms that is going to come will greatly benefit Adani, since they are the one who's having a large number of contracts and large number of execution that is going to happen in the coming weeks. So if the same government comes up and Adani group of stocks, any Adani group of stocks, I would totally completely be bullish on that, those specific stocks. With respect to PSU banking wise, definitely FI is going to bet big on those banking sector stocks. Like economy is directly related to the banking sector stocks. So obviously, if what we are expecting going to happen tomorrow, then banking space is what I would expect further up move in the coming months.
What strategy would you deploy on it?
I would go with the momentum factor, totally on the momentum factor. I would not not with respect to option selling. It will be totally on the futures or on the cash market going long. So if you are a person who is specifically dealing with stocks, instead of buying any kind of options premium on the long side or on the put side, because the IVs has already gone up, so try to avoid buying any kind of stock options. And even if you're trying to get into option selling, it might not be really liquid enough compared to the overall indices. So I would totally avoid dealing with options with respect to stocks. Instead, I would directly go long with respect to futures or in cash markets with those stocks which I've discussed.
Santosh, what's your view?
I don't know. We are on the same page again. Okay, so all Adani Ambani stocks. That is what I would recommend to go again in the cash market only. Okay, avoid options market. The reason being that the premiums are very, very high in the option market. Okay, so if you go forcefully, if you're going to do a trade, that would become slightly difficult. So I'm expecting all Adani's, Ambani groups, Reliance groups to go further up. I'm expecting PSUs to further rise. Okay, that could be a bet, and maybe a most likely because if the BJP government comes back, NDA government comes back, maybe we can focus more on the defense sector. Okay, so that could be the three my preferred thing that Adani Ambani groups, and then PSUs and the defense. Okay, so those are the three sectors I would prefer to go long in the cash market. Absolutely no kind of a long trades in the option. If provided, I might go for a short trade, like a short iron condo, those kind of risk defined strategies. I might go in the PSU's bank, okay, like SBI, those kind of things. I might attempt that, but personally, no buying or credit or debit strategies in the options at all in the stocks market, okay, in the stock option.
All right. On that note, I'll ask you the last question. What would be your advice to traders this week as we have such great momentum in the market? Kirubakaran.
Yeah, so if you're an option seller, try to play with the reduced position sizing. See whether what kind of strategy that you deploy doesn't matter. These kind of events is not going to give you a windfall gains if you're an option seller. So, but your risk could be much higher if you get stuck with respect to illiquidity stock options or no any kind of options which gets into a totally illiquid factors. So try to reduce your overall size until the volatility subsides. And second thing is, be it in stocks or be it where whatever kind of traders that you are. If you are a normal trader, do not try to get into the euphoric zone. So seeing, you might would have taken a position on Friday, taking a long option. You might see a good profits currently now sitting at a good profits. But thinking that most people, what they tend to do is they tend to take a higher leverage. They tend to think, okay, see, whatever things that I've done on Friday has given me good result. Now I'm going to bet big, risk more, and try to trade for the tomorrow's election result. So if you are in that zone, try to reduce your overall expectations because that might put into a lot more trouble. So even if you wanted to go along with respect to option buying, try to go with the reduced position sizing. That is what I would suggest until the volatility subsides. Try to go with the reduced position sizing.
All right. On that note, thank you so much for joining in today for our special session. We're at the end of, we are lacking time, so we'll have to cut it. Thank you so much, gentlemen, for joining and taking our time.
Thank you, Manikanda. Thank you, Suchita.
Thank you,
so
Sucheta.
much.
Thank you, Santosh.
Thank you, Kiru.
Yeah.
Thank you. Bye-bye.
Bye.